what does your credit have to look like? What is good? I know there's good and bad debt, right? Student loans, credit cards, car loans, Home Depot, all these things are on your credit card, on your credit report, right?
Correct.
From Equifax, TransUnion, whatever the case is. What do you guys use to pull? Is it primarily Equifax or is it TransUnion? Is it both?
It can be either or depending on the lender, but it's primarily Equifax for the majority of lenders.
Yeah.
And credit score, I'm glad you brought that up too, because again, these are like the main pillars of a mortgage application. You're looking at roughly needing about a 680 credit score, and people get over obsessed when it comes to credit.
Sure.
And credit is probably, in my opinion, of the pillars, the easiest, the simplest, the least stressful. Because when it comes to credit from a lender's perspective, you either have good credit or you don't.
Yeah.
And that deciding factor of good versus bad is 680. And that doesn't mean that if you have a 679, you're screwed.
It might vary.
Yeah, it varies. I mean,
Right.
you definitely want to be on the better side of that number. But I've got clients approved with a bank with a 640 credit score.
Right.
Because it's more so about the story. Okay, like if you got 640, but it's because I had some high utilization because I had to help my mom move a couple months ago.
Sure.
Cool. Like it's understandable, and we can see the track record of prior to a couple months ago, your credit was clean because it shows your payment history, right? So the rule of thumb is you typically want to be around 680, but again, if you're below 680, it's not the end of the world.
Yeah.
But it's still about knowing, okay, what do I need to do to improve, or where do I currently stand, so I know how to navigate going forward.
So you're at a 650, you have a year runway. In your mind, you want to purchase something in a year and a half or so. What kind of things can you do? Obviously, pay down the debt. Never close. Correct me if I'm wrong.
Great. Yep, you got it.
Right?
Yeah.
Never close the actual cards or the accounts.
The only time I would say to close an account is if you inherently know I can't handle this.
Right.
Like I know that there's people out there who they got a credit card on their desk and they're itching. I gotta go spend.
Yeah.
If you're one of those people, close it.
Close it.
But if you're someone who's like, okay, you know what? I have self-restraint.
Yeah.
Don't close it, because the history along with that card is going to negatively impact you, as well as no longer having access to that card's limit is going to negatively impact your utilization.
Right.
So have it open, have it paid off, leave it.
Small balance maybe.
Exactly. Use it, pay it off. Use it, pay it off.
Right.
Small balances, you're golden.
Right. You have a $10,000, cumulative credit debt, right? What's a good utilization score on average? Like, you have $10,000. How much of that do you want to have carry a balance?
Yeah,
maximum.
I mean, if possible, you want to be around 30% utilization or lower at all times. So if you've got a $10,000 card, you want to be around 3,000 or less, which I think is more than reasonable, right? So that's kind of that's where you want to be. I mean, again, not to overreact. If you're at 40% utilization, it is not the end of the world, right? And this is where
at 90, it's an issue.
It is, yeah. That you might be getting close to the end of the world in that case, right? But and this is why, I know credit can be a really touchy subject.
Right.
Finances in general are really taboo. But a lot of what I do is just letting people know that it's okay. Where you are right now is not the end of the world. What's really problematic is you being wherever you are and you thinking it's a problem and not doing anything to actively change it.
There you go.
And not seeking the information.
Right.
So having this conversation now is perfect because people can very clearly know, okay, 30% utilization or lower, I'm good.
Yeah.
I'm going to have the best reflection on my credit score. If I'm at 70% or higher, which is where you don't want to be, I got to work my way down to getting from 70 to 60 to 40 to 30, and now I'm getting into a better range and improving my credit score.
Right. I had a conversation with my mother. We're talking about whether to go with a big bank or private lenders, the A, B, C, D, E, F, G banks of the world.
Yeah.
Right? Are you a mortgage broker, or do you work with a specific location business?
So I'm a mortgage agent which has access to a bunch of different lenders. A lenders, banks, monoline lenders, B lenders, private lenders, and a whole bunch of different lenders, right?
Sure.
But the gist of it is I have access to whatever solutions are out there that you may need.
Right.
And
so you shop the profile around.
Exactly.
Like you're getting car insurance, the guy would go find you.
Exactly.
Find
Same
you guys.
concept. Same concept. Yeah.
Right. And then do you work specifically with the red bank or the blue bank or the green bank? Does it matter, or is it different? Like, how does that work?
So it's never about having, granted, having a preference for a bank because of how their product functionality is one thing, right? Like being able to say, okay, you know what, I like Bank A because they've got great prepayment privileges, they typically have decent rates, and they're really lenient with how they, look at credit score.
Sure.
That's one option, right? Sure. But making sure that I still make sure that I'm taking a client to the lender that best suits their particular situation.